I feel like part of this is driven out of fear, the fear of giving the wrong advice. Oh, founders would say, "Oh, Tiang, can I spend some time with you, get your insights?" I don't have insights,
Yeah.
right? Can I get some of your advice? And to me, the fear is saying the wrong things at the wrong time.
Right.
Why? Because I think every company's situation is very unique.
Right.
I think it's very counterproductive to give very generic advice. My follow-up question then is like, have you considered this, that, right? It really depends on the company's circumstances. And to me, to give good advice requires a lot of work.
Welcome to Brave. Learn from Southeast Asia's best tech leaders. Build the future, learn from our past, and stay human in between. No BS on success. I'm Jeremy Au, venture capitalist, serial founder, Harvard MBA, science fiction nerd, and dad of 2 daughters. Every week, we debate startup news, interview changemakers, answer listener questions, and share personal insights. Join our movement of over 20,000 members and get transcripts, resources, and community at www.bravesea.com. Nodeflare is a trusted recruiting partner for startups looking to scale their technology teams. They have a curated pipeline of talent from data scientists to full stack engineers. Learn about the latest salary trends and benchmark compensation across the region. Nodeflare offers more than 10,000 verified salary data points completely free to employers. Check out www.nodeflare.com today. Hey, morning, Tiang. Excited to have you on the show. I think I've watched some really impressive investments you've made over the past year, and I'm glad we finally could make a time.
Yeah, thank you. Thanks for being so persistent in chasing me down. I do appreciate it and apologize for the scheduling challenges. And I'm really, really honored to be here. To be honest, I'm a little nervous because I was just looking through the list of guests that you have on. And I was like, wow, this is the Hall of Fame, right?
Well, at least we authenticated that you're human, right? So this for now.
That's right. I'm real. I'm real. I'm here. So,
it's only 5 more years before I think it's Avatar. But on that note, please introduce yourself real quick.
Sure. So Tiang here. My full name's Tiang Lim Foo. First name's Tiang Lim, Mr. Foo here. But my friends call me Tiang. I have been a professional VC for the past coming to 7 years now. And most recently, I started my own seed VC firm called Forge Ventures, investing in pre-seed and seed companies here in Southeast Asia across Singapore, Vietnam, Indonesia, Philippines, and beyond. Right. And before that, I was at a company called Evernote during my operating days and started the office here, launched a product, built a team, and launched a region. Really started my career as a product manager at a fintech company here in Singapore. So the past almost 12 years now had always been in tech, product, building businesses, and now venture in Southeast Asia.
Yeah, you've really had an interesting early technology career in terms of like launching the Singapore office for Evernote. I'm so curious about, well, I have my own thoughts about Evernote. I was a big Evernote user, I want to say.
Tell me everything. What's in all?
Unfortunately,
I still do customer service for users. Yeah. Like, oh yeah, that Evernote guy.
Yeah. Unfortunately, I think I've pretty much migrated to Apple Notes and Google Docs over time. Such a shame on the product.
Oh, fine and good.
Yeah. So I think what's interesting is that you made a transition from market development, right? And office launching in the APAC, and then you transitioned to investing, right? So what was behind that transition from your perspective?
I think the theme is accidental. It's not like I don't know what venture capitalists are. I do have a notion of what that is, but it wasn't ever a career goal for me telling myself I wanted to be a VC, right? So I didn't stack my resume in such a way that eventually I become a VC. That's not an exit strategy. So it's quite accidental. For me, thematically, it's always about being in the thick of working with really smart and driven people, right? And try to build things along with this group of people as well, right? Whether it's in a product context, whether I'm building businesses, starting companies, and now venture, right? And that's a reason why I think seed is really exciting. A large part of it is because it's part of building to me, right? It's the closest you can get to the metal in the earliest of days when you're partnering, founding teams where more things are broken than they're not, and you're trying to figure things out, right? So to me, a lot of it is that. How do I continue to bring that passion to entrepreneurship, the belief in technology, and marry that with my day job. So, like the Japanese Venn diagram, they call it ikigai, right? What the world needs, what you think you're good at, and what you really like to do. I think for me, it's a very nice overlap of all three. That's why I'm doing what I'm doing now. Yeah.
Your first experience, right, transitioning to venture capital, right, was with Jungle Ventures, obviously, which is a
Yeah.
successful fund, and you're operating Seed Plus, the
Uh-huh.
fund, right? So kind of like zoom in on that moment, right? You had to make that choice to transition from being an operator to being an operating partner and be venture capital. So what was going through your mind in the calculus or that career decision, right? Because you had other opportunities.
Yeah, I wish I was a lot more articulated back then. These days, when I talk to people, it's like, oh, we have a lot of interns from top business schools in Singapore or across the world, right? When I ask them, like, oh, why do you do what you want to do? They're 10 times more articulated than I was, right? And I wish I had half that articulation back then. For me, really, it's abiding by those heuristics and principles, right? But dialing it back to 2015, I just started making my first angel investment, and one of the first investments I made was into a company called Xverse. You might have known them. Second was a company called Talenox, like a payroll software here in Singapore. So to me, it was really interesting in that it helps me learn a lot more than my current operating context, right? I think maybe you definitely know better than I do. Some of the motivation of me making angel investments is so that I can get better at my own day job. Because it's like now I have a connectivity into a different industry, sector, business. You try to gain more perspective, and there's pattern recognition there, right? So that's the genesis and seed of what I thought could be interesting in doing more investments, right? Sometimes I think luck is a very important element in everyone's career, myself included. Is that at that time, very fortunately, Amit from Jungle reached out saying that we're incubating a seed fund called Seed Plus. Do you want to come in and check it out? So I spent time with Amit trying to understand what it means to be part of this setup and platform, and thought it was pretty interesting. And it also didn't felt too unfamiliar to me because a lot of the startups that we were backing were really, really early stage, right? These are founders that are still in a proverbial garage building for a really small initial audience. And a lot of that familiarity in the early stages of going to market, building the team, building culture, recruiting, I found an urge that I think I could help. So yeah, so it's the coincidence of all those factors. And I thought I wasn't taking a step back and look at what Southeast Asia could become, right? At that time, I think My Taxi, which became Grab, just launched barely, right? There wasn't a notion of companies going public. It's just a bunch of people thinking that there's this possibility of building very interesting companies from Singapore and beyond. And let's see where we can get to from here. And it's that kind of passion. So,
Amazing. And, what's interesting is that you did angel investing and you took the chance to explore this. And then you kept going,
yeah.
right? Which is the interesting part, right? Because, why you start something is always different from why you keep doing something, right? Because you learn more about what it is and how it's actually being done. So you kept going, right? Because you built that first fund, right? And then you deployed that first
Yeah.
set of checks. And then you made
Yeah.
a decision to let's
Yeah.
keep going with another vehicle, right? And so on and so forth. So
Yeah.
I think that's an
Yeah.
interesting decision point, right? That's a little bit subtle, right? Because
Yeah.
I think lots of folks don't like angel investing, or lots of people actually don't like professional investing, right? So you made that choice to
I
keep going.
think yeah, no, that's a good thing, that interesting thing that you observe, which is I think over time I had one insight, which was not very profound, but when you're in the thick of it, I finally internalized it, which is to do something really, really well, you need to spend really, really long time doing it, right? Earlier in our careers, I think we tend to optimize for optionality, right? Or maybe I like this, maybe I like that, maybe I'm good at this, maybe this is something I don't like. You try to optimize for optionality, right? But as you grow older, as your opportunity cost gets higher, those doors they start to close, right? And you have to start picking what to really dedicate and commit yourself to. And one of those options I picked was venture capital, right? And it's also the nature of the industry, I think, because the feedback cycle is incredibly long. And if I look at a lot of the greats in the industry, Brad Wilson. Everyone's been doing this for a long, long time. And to get good at it, you can't compress time. You really need to let time pass before you can get to some reasonable level of pattern recognition, whether it's in optimizing deal flow, selecting, seeing enough scenarios in the boardroom, how do you create value, how do you exit, right? All those take time, right? And for me, is that picking that and sticking to itness that spoke to me. And I decided that I might as well commit, right? So.
I might as well commit. I like it. And what's interesting is that when you said might as well commit, I'm just curious, what were those doors or roads that you closed off, right?
Yeah. Yeah, no, that's a great question. What are the scenarios? So I could have maybe do my own startup. In fact, I'm sure you have your own version of your COVID story, right? Mine was when we were done deploying Seed Plus Fund 1, there wasn't plan for a Fund 2. So at that juncture, a couple of scenarios could have happened. I could have gone back to operating, right? Maybe join a portfolio company, join another big tech, whatever, right? I could have do my own startup, or I could have joined another platform, continue the journey of a venture investor. And I did all of that, So I tried all of that, rather. And then 2020 came along, March 2020 came along, COVID happened, and all those options just became a non-starter. A lot of them become a non-starter, right? It was really hard to travel. It's really hard to meet people, and markets were very volatile, and signals were or noise. There's a lot of noise, and signals were all over the place, right? So it became a bit of a enforced sabbatical. I've been working like a dog for 10 years at that time, and I had my son. He was turning 2 at that year. So I decided to take a sabbatical and just stay home and be a dad. That was fun. And so it's a little bit more circumstantial, I think. No, it wasn't very deliberate in that, I try to do this, is a priority, here's a matrix. It's more circumstantial, right? But that brought me to another, I think, insight, which is life happens. Sometimes you plan for it, and then COVID happens, and Tokyo has to reschedule their Olympics. And if Japan is doing what do you have? What can you do, right? So it's just kind of zig when the world's zagging. But a few things started happening. I think this is also where I was quite opportunistic. I went back to angel investing. I still see pretty interesting deal flow. So I started leveraging that into me going back to investing again, right, in the individual capacity. Made some interesting investments there, and through that experience, also learned how to build a syndicate. Got to know a lot more people through the capital network, and very fortunately, a few of those family offices, they started talking to me about, why don't you just raise a fund? So one thing led to another, and that was the genesis of Forge Ventures, right? So that happened.
Well, it's not easy to launch a fund, right? Because you make it like, oh, I decided to launch Forge Ventures. What went into that decision? Because you could have joined another fund, right? As well, right? There's lots of different roles. And during that time frame, a lot of people were hiring, right? For people like you as well.
Yeah.
And with your own track record, your own reputation, your own network, which has been good. People know you as a high integrity person who's thoughtful and getting stuff done. So you made a decision to launch your own fund, right? So, and you did have Casper as well. So I'm just kind of curious about how you made that decision.
Well, so at the end of the day, to me, it's about life is short, right? Life is short. So let's establish that life is short, and especially so relative to the type of work that you want to do and the outcomes that you want to achieve, right? So life is really short. You probably only have 1 to 2, I think, meaningful projects that you can do in your life before you have to focus on other priorities in other seasons of life, right? Now, I speak like I have a lot of wisdom here, but that's genuinely how I feel. And I feel that given where I am, I have a reasonable shot at building something interesting in venture, because I recognize that, especially here in Southeast Asia, I think there's still a lack of seed capital, especially in the earlier stages for founders. Don't get me wrong, I think there's a lot more opportunities for founders than before, right? A lot more options as well. It is a more dynamic landscape, but at the same time, there's still that gap between, I want to start a company to Series A, right? That capital gap, I think, in my view, still exists, especially for a institutional seed firm who wants to be a lead investor of record for your first round, right? I think that's a gap that exists. So we recognize that there's an opportunity. And then the other thing is, again, very fortunately, I've been able to had some early successes in what I do. So I had a network, I had a reputation, I had some resources I can
Mm.
leverage into this, right? So that coincided with what I recognize as a market opportunity. And most importantly, I think for me, the highest aspiration is how do I it's a little meta, but how do I create an environment so that people like me can be successful investors,
Mm.
right? As you say earlier, I'm still emerging. I recognize that I'm still quite early in my VC journey. And I think there are a lot more people like me that are more talented, smarter, but just don't have the environment to maybe perform at their best potential. So how do we then create a firm with an environment that helps people to be successful, right? With minimal politics, I need to do something else besides investing, right? So to me, that's a bit of my own entrepreneurial expression, right? How do I create a firm that can enable the potential and success of other investors and founders through this?
Yeah. And you made the decision to be, like you said, that emerging fund manager, and it's tough, right? Tell us about how tough it was, or what were the tough moments in choosing to launch your own fund.
Yeah, to give you a sense, we had about 500 meetings or calls. Now, these are individuals or high net worth or family offices, institutions to get to first close at Fund One. There was a lot of Zoom calls, but we were also very fortunate in our timing. So we decided to partner. Me and Casper decided to partner and also work with our anchor and launch the firm in early 2021, April 2021. Spent about 5-6 months fundraising and did a first close in September 21. Again, very fortunate. Our initial target was just 15 million first close, right? We got to about 22, 23 million for first close. It was amazing, right? And never had I ever imagined being able to do that almost entirely in my living room on Zoom. It was, I think, not a very replicable experience. I don't think, right? The tough part though is in making that decision in yes, I want to do this. I want to start a VC firm. I want to raise fund one. The tough part is gaining conviction to do that because of opportunity cost, right? I will feel very responsible for launching a fund with other people's money, and I have to be responsible for the next 10 years. It's non-trivial, right? And having been through some version of that at Jungle at Seed Plus, right? I know the level of commitment that you really have to put into making sure that this is at least not a failure. Let's not talk about wow successes, right? Because sometimes that's depending on timing and luck. But at least it's not a failure, right? And it's a very long-term commitment. So a lot of that difficult journey to me is actually not in the fundraising because that's going to be difficult anyway. The difficulty is in making that decision to do the work and who you do it with, right? So I spent a lot of time really trying to understand the partners that I'm working with Casper, with our initial anchor LPs. And that's also a bit of a journey to understand myself better, what I really want to do over the next 10 years. We talk about commitment. And I felt that, yeah, if I'm going to take a bet, why not take a bet on myself, right? So
I love that. If you're taking a bet, why not take a bet on yourself? Especially when you're taking bets on other people, right? Yeah.
that's right.
I think you say something which is very true, right? Which is, I think to some extent, you're implying is the easy part, even though it's hard, is raising money, and the easy part is writing checks, right? The hard part is the follow through to make sure there's actually a return at the end of the day, right? Especially at the C stage, right? What have been your reflections, right, over this time, right? Because you've seen about 2 generations of portfolio companies go through multiple rounds of funding rounds, right? So you've probably seen death, you've seen acquisition, you've seen some success. What have been your reflections about the importance of your role in making, I don't know, the difference in those outcomes? Because in other words, why do you have to work so hard? I mean, why not just put the money, let it ride? I'm just saying,
Why do I have to work so hard? That's a question I ask myself every day. Why do I have to work so hard? For the love of it, I think that's the highest order bit, right? I just love being in the trenches with founders. I think for me, what really gets me going is talking about strategy, product, customers, users. I just love building, right? That's a huge element that's underpinning this whole mission, if you will. I think the other thing here is that I think, well, yeah, probably two, three, 2.5 generations of companies. I've seen that, right? I've seen exits, M&As on both sides of the table, deaths for sure for various reasons, whether it's founder disagreements or PMF, right, lack thereof, running out of capital, externalities like COVID,
Yeah.
and we can talk about that for sure. Right, I learned a lot about product market fit, especially on the market side when COVID happened. Doesn't matter if you have PMF, right? If the market suddenly disappears, you don't have PMF anymore,
Yeah.
and that's COVID, right? So I definitely saw a lot, right? I think to your point, if I take a step back, I think one thing I learned was there are various ways to be a successful VC, right? One of the questions I get asked a lot is, especially from younger graduates, they will ask me, if I want to be a VC, should I be an operator? Should I work in a startup? Should I have been a founder, or can I just like get started on the ground floor as an analyst and work my way up, right? I mean, based on my observable data set, it seems like there are many paths to success, right? Some of the world's greats, again, like Fred Wilson, Bill
Yeah.
Gurley, career VCs, right? Never really operated a business before, started a company, but they're really successful. There are also other counterexamples to that, right? So that seems to suggest that there are many paths to be a successful VC,
Right.
right? That's point number one. And point number two is that there are also many ways to be a success, to choose your own style as an investor, right? One of the one of the materials that I consume a lot in my early career as a professional venture investor was Brett Feld's blog.
Mm.
And one thing that really stuck with me was something that he said about, you can't typecast founders, right? Because founders are just people, right? I mean, they are archetypes, but
Mm.
they are not stereotypes, right? You can't stereotype founders because everyone's
Mm.
circumstances are different. They have different hopes and fears, personalities, value systems, and that also extends to VCs as well, right? I think sometimes the media or the community or founder narrative kind of overplays a little bit too much is the brand or the brand of the firm,
Right.
right? But not enough attention is being paid to the individual that's either leading the deal, sitting on a board with you, or working with you
Right.
from the capital side, because that's important too, right? And that gave me a lot of perspective and frankly confidence
Right.
in choosing the type of investor I want to be, because it's my own leadership journey,
Right.
right? I can choose how to understand my weaknesses and strengths and how do I bring my best to the table in my own way. That was really helpful.
What it reminded me of actually is you've always struck me as a very thoughtful investor, right? I mean, you've always been very, I don't know what's the word, considered. I don't know.
Thank you.
Like when people describe their startups or how their judgment making process, people can make it very large, right? Very shiny, right? It's a no-brainer. And then if you ask me, like when I hang out with you, it's like, it's always very like considered, very measured, very thoughtful, right? So I think that's definitely, I think that resonates, that Brad felt energy is resonating.
That's a really nice thing to say. Now, I think that's also, so here's one thing, right? I feel like part of this is driven out of fear, the fear of giving the wrong advice. Giving it, so, like, oh, founders would say, oh, Tiang, can I spend some time with you, get your insights? I don't have insights,
Yeah.
right? Can I get some of your advice? And to me, the fear is saying the wrong things at the wrong time.
Right.
Why? Because I think every company's situation is very unique.
Right.
It's very hard to, I think it's very counterproductive to give very generic advice. In the downturn, you should cut 30% of your workforce, extend runway by 6 months. But have you considered, but my follow-up question then is like, have you considered this, that, right? It really depends on the company's circumstances. And to me, to give good advice requires a lot of work.
Yeah.
You have to have the context, you have to stay with the company or the founder for a period of time. You have to understand where they're coming from. So the context is very important, right? And even that, I stopped short of saying that these are advisors. It's more like, can I be a reasonable sounding board to you as a founder? And all those time spent with you just lets me ask better questions,
Yeah.
right? Rather than giving you the answers. So yeah, it's really about that. Right?
What do you think is the shadow, right? Or the downside, right? Or the trade-offs that you inevitably make because you're taking this approach from your perspective?
I think sometimes it's a very fine line because there's this wider sentiment of how do we be founder friendly, as if it's a given.
Yeah.
But again, we also see examples in extremities, right? Where under the banner of founder friendliness, the governance of the company just goes off the rails. So it's a judgment call at every turn, right? Especially in your interaction with founders, especially in the boardroom. I think so for me, my shift over the years was rather than trying to err on the side of being founder friendly, it's more like going back to the principle of how do I help realize the potential of founders, right?
Right.
If this is, and constantly I'll ask myself that, am I helping the founder to be the best version they can be? And and it emanates from that, am I helping the company to be the best version the company could be, right? And the construct of the company is more than just the founder. There are other stakeholders like board, the shareholders, right? Especially if you're building a mission-driven business, you should care about your customers a lot more too. And those are, all the definition of the word stakeholders of the business as well, right? And we should consider them to the wider community, the impact on that, right? So my starting point is, yes, I want to make sure that the founders are realizing their potential, but also we have to consider the wider ecosystem around a business, right? And that is a balance between all of that. There's no easy answer. I think every decision sometimes feels like a trade-off, especially in high stress times, in a downturn where options seem very limited. But I see my role is in helping founders thinking through different options and sometimes generate options that they didn't even know exist, right? Yeah. But emotionally, it's very difficult. So,
man, why is it emotionally difficult?
I don't know how other people do it, but at least for me, I think it's a characteristic, especially for early stage investing, where you spend a lot of time, as much as you can, to make an informed decision based on quantitative data, but more so qualitative data, right? And that's based on the interactions that you have with founders, your pattern recognition on technology headwinds, tailwinds, industry headwinds, tailwinds, your understanding of the product, right? And at the end of the day, whether to make that investment decision is ultimately a leap of faith, right? You are taking certain risks and making a certain bet. And to me, that's not just it's not just dollar capital being spent, but also emotional capital being spent, because you're putting your reputation online, you're putting your time, your energy, and you're making a judgment call on a person. It's like getting married, right? When you're dating. I don't have a lot of dating experience. I should want to clarify that, but when you're dating, how are you sure, right? At that moment in time, ultimately, it's a leap of faith. So yeah.
I think you also made a really good point about founder friendliness, and you're looking to maximize potential instead, right? That's actually a bit mildly contrarian, right? I mean, we've seen so many seed companies come and go, and I think there's obviously that huge gap between what they could be versus what they are versus what needs to be done. Not only that, I think you've chosen to do seed and you've chosen to lead, right? You've chosen to take on that main responsibility of shepherding them through that very vulnerable 2 years, right?
Yep.
And actually, I think those 2 years are really different. I think when you're like Series C, Series D, the founders train, the executive team is in, potential maximizing, everyone's very, I think, aligned in that late stage. But I think seed is really all these like very big debates really happen, right? Like you said, board governance is one, thinking about the business and so forth. So how do you try to approach that conversation with founders, right? Which is like, hey, here's a founder-friendly conversation I could have versus here's a potential maximizing, which includes corporate governance, know your customer, all these other things, right? Product market fit conversations, right? How do you try to approach that?
Yeah. I maybe a bit of a tangent here, but again, technically, I think VC is on the buy side, right? Technically, because you're buying equities and securities, right? Technically, but I always feel like we're sell side and sell side because we're selling to LPs, we're selling ourselves, and then if you're looking at an interesting deal, competitive situation, you're selling to founders as well, right? So you're always like kind of selling and selling. And then there's the recruiting aspect and all that. There's a point to this, which is I think the inherent tension in trying to get into the most competitive investment opportunities.
Mhm.
So there's always an element of like, oh yeah, how much truth saying should I, in if I offend a rockstar founder or whatever, right?
Yeah.
Yeah. So that's always a bit of an anxiety there. But at the end of the day, I think what's really worked for me is being authentic.
Mm.
I think there's a difference between me telling you an opinion, and I'll just say that it's an opinion, or it's not fact, it's an opinion. My opinion on whether this strategy works, whether you're doing something right. It's just that it's an opinion. But I mean well. It's not. I don't want to. I didn't come from a place where it's malicious. I didn't come from a place where I'm not trying to. I'm not meaning well, right? I'm just being authentic. I'm stating my opinion, and these are sometimes really strong opinions, but loosely held, right?
Right.
So I think as long as you abide by that principle, 99% of the time people understand feedback. They take
Mm.
feedback quite constructively, right? Even if they don't agree with you.
Mm.
But that in itself, that interaction in itself is a bit of a data point, right?
Right.
And potentially how founders behave in stressful situations, how your working relationship will be with the founder as well. So I take those interactions very seriously, because it is like a marriage, right? When you invest in a company, it's so hard to get off the cap table one way or another. So
Yeah. It's a stressful job, right? I mean, it's just a hard building a great business is hard. Trying to build a great business within 10 years is even harder, right? So I think that
yep.
teaming is so important, right? It's not really like a business partnership, right? I don't know. It's like what mountain climbing a team. It's a high risk.
Mountain climbing.
It's a tough job, right? And
Yeah.
you need everybody to pull their weight, right?
Yeah.
And I think what's
Yep.
interesting to see you is obviously you're having those tough love conversations. As you do them, I guess how have you personally improved in the way that you had that conversation, right? Like you said, right? It says authentic, it's an opinion, it's in good faith, right? It's business judgment. How have you improved over time in how you conduct or do those conversations? Yeah.
Listen more than I speak. That's one. Saying I don't know more often. That's also one, right? I think especially earlier in my career, because you're maybe some element of imposter syndrome,
Mm.
some element of I want to prove myself, right? So you tend to speak more than you listen. You tend to say I don't know less, right? But over time, I think it's about gaining that confidence in saying I don't know and listen more, right? It's something that I deliberately try to practice.
Mm.
And I realized that actually the bottom line is just being available. My surprise has always been how many founders will tell me sometimes, oh, a board member or a lead VC, they're not available, right? No, let alone giving good advice or being helpful, right? They're not even available. And if the lowest hanging fruit is just to be available, I think I can do that, right? I can try to do that as much as I can. And when we scale, we can have more people try to do that, right? Just to be available. That's so important, right?
You made me laugh because, anyway, yeah, you're right. I mean, there's a lot of unavailable VCs out there. Very impressive, actually really smart, really hardworking, and really great VCs. They're just unavailable, right? Because there's so many people who want to meet them, and because it's so busy and time is short, right? From your
Yeah.
perspective, how do you think about that? How do you structure your own availability, right? Because you're also a dad, right? You got those LP conversations, you got the portfolio companies, you're talking to new companies. And I don't know, after those four things, I don't know what else is left about your hobbies or personal interests.
I don't have friends, so that helps.
Okay, at least
I'm
you have
just
your
joking.
kid is becoming a friend eventually. Frenemy, right? Yeah.
Yeah. He's a buddy.
Yeah, he's a buddy, yeah.
I think it's about. I'm constantly learning. It's a work in progress, right? But I think one thing that everyone collectively decided to get better at is having less FaceTime but more authentic. I don't know, digital time,
Yeah.
right? Because of COVID, we can have we're more used to as a species to have conversations over Zoom, over texting,
Mm,
Slack, what have you, right? It's more socially acceptable, which is nice. I think it's more
right.
efficient that way. That's for one. I think the other thing, it's about response time, right? Do you have a system to respond to queries, interactions, text messages, what have you? I'm constantly trying to get better at that. That's the low hanging fruit. What else? I think the quality of interaction also matters, right? It's not a function of how many times you speak in a week, in a month. It's whether for each session, for each interaction, are you really there? That's what matters, right? Because some people, maybe you meet them only once a year, even, but if the interaction is very high quality, it feels like you just spoke yesterday, right? And you can continue that dialogue. I think being present for those moments are very important. And I kind of learned that. So, no, again, I'm very thankful for a lot of people who are so generous with their time with me. And one of those folks is Jenny Lee from GGVC. She said that when she was at meetings, every meeting, well, she picks meetings very judiciously. And there's a reason why, right? Because every meeting she takes, whether it's founder or whatever interaction, she's there. She's not looking at her phone. There's no IM coming in. She's just present. And I thought that was a really nice practice to try to be deliberate about. I try to be deliberate about. I think that helps for sure. So.
And on that note, when have you personally been brave?
I don't know where brave is such a loaded word. I think for me, I'm just trying to enjoy the whole adventure, whether it's the upside or the downside, right? Yeah, so it's really hard to point to a specific moment in life where I can really live up to the spirit of being brave. Instead of that, I think I'm inspired by many brave moments that the founders that I work with, they undertake, right? Whether it's I was talking to whether it's Harshit or Tommy from Koala. I was the first investor in Koala back in 2018, when just two of them with a business plan, right? And I remember those early days. One of the very counterintuitive and frankly scary thing that they did was they rebranded the company 4 times.
What? 4 times?
We didn't spend off.
Why not 5 times
so
if you do 4 times?
I don't know, or 4.5, right? So I don't know. So I think it was called Luban Lab, and then it became Brella because umbrella, insurance, whatever, right? And it was called Volo for a while, right? Today the Slack is still called Volo, the URL, and then it became Koala with a Q. It was a little scary because a lot of the partners that they talked to at the initial stages were big insurance companies, right? And for big insurance companies, you don't want to appear inconsistent,
right?
But they were so fixated that in trying to create a brand and a brand experience that really speak to their values, principles, and what they're trying to do, they are okay to just iterate to get to the right one. And thank goodness they did, because these days I type Koala with a Q instead of with a K. So it's great, right? And there are many such moments, right? I found us where in the midst of building their company, going through a divorce, but soldier on anyway because they believe at the mission at hand. I found us that have their parents pass away or grandparents pass away during COVID, right? But they continue to execute anyway. And not just for the company, but also for their employees and all that, because they care so much, right? That always continues to remind me why I do what I do, right?
I've got to approach this from a different way. A lot of folks will look at you and say that you setting up Forge Ventures was a brave moment, right? Because you chose to be contrarian, you chose to build it, I think, in a disciplined way, mildly contrarian, kind of like back to fundamentals approach, right? And you chose to do it as an emerging manager, right? So people will look at you as a brave moment, and people will look at you as being brave in doing so. Do you feel like it was brave? How do you think so? Yeah.
I'm gonna disappoint you. Okay, so here's the analogy I'll use, right? Do you do marathons? Do you do?
I did 2 marathons when I was young and fit after national service army time. Yeah. Now I'm not so dad bod.
Yeah. So I'm reading this book by Murakami, right? Haruki Murakami.
Oh, that's a classic.
Yeah. He's a Japanese writer. A lot of good work. And the most recent, the book that I'm on right now is his collection of essays on how he approached novelists as a profession, which is super fascinating, right? And he's also very well known for being a long distance runner. And one of the things that really resonated with me was he's very matter of factly, he said that I've decided to be a runner, and once I made that decision, I'm a runner, right? And that means I'm getting out every day to do a certain no to do a certain distance. I've decided to sleep early. I decided to eat well. It was difficult, but I've made that decision. I'm gonna do it anyway, right? And that, to me, that kind of resonated with me because that's how I felt. I've decided that this is an interesting opportunity. I decided that this is the right thing to do, and I decided that this is what I want to do. Oh, I'm doing it, right? Whether it's difficult or not, that's part of the journey. So
How does that apply from your perspective to your own situation?
many people tell me that it's very hard to raise fund one, right? As an emerging manager with limited track record, limited network, and all that. So it's a known problem. You hear it on podcast, right? Oh, fundraising is so tough. I talked to 500 people, right, to get to fund one. You many people tell you that, oh, it's really difficult to build a team. It's very difficult to get deal flow. I mean, it's difficult anyway, right? But I tell myself that because it's worth doing, because it's important, and yes, these are difficult. These are difficulties, but there are known solutions to these difficulties. Just go find them, right? Only if you when you decide that this is something that's worth doing. I think for me, well, maybe one way to illustrate the courage of the moment, it's really making that decision in this is what I want to do for the next 10 years, because I could have done so many other things, right? It was a little scary, right? I think the most scary part is about, am I picking the right people to go on this adventure with? Am I do I what do I know that I don't know? So it's the unknown unknowns that really kill you sometimes, right? So it's really a lot of those certainty. So managing that anxiety is part of the process, right? Yeah.
How do you manage anxiety? Do you run? I guess you read Murakami.
I run.
Oh, you
Yeah, that's
also
the
run.
answer for
So
you. That's right. Yeah.
Wow, this book is great.
I run.
Murakami and
Yeah.
runs. There we go.
I know.
Yeah.
I love it, right? So here's another book. What I think about when I run, something like that. I'm paraphrasing the title. I do a lot. I do long distance running, so that's really meditative for me. Yeah.
Yeah. Wow. Thanks so much for sharing and discussing. On that note, I'd like to kind of like reflect on the three big themes I got from this conversation. The first, of course, is thanks so much for sharing about how you started investing, and more importantly, why you continued investing, right? And I think your reflections on, I think, the decision moments and the inflection points where you could have chosen something else. And I thought it was very nice of you to share about, making a decision about getting good at it, but also closing doors and therefore shutting off optionality, right? To reach mastery. I think that's a very subtle point, and I think you said a lot as well, but I think it's very interesting to hear it in your own context, right? The second I actually enjoyed was, I think, this tension, I think, between founder friendliness and potential maximizing. I thought there was a lot of interesting conversations that I would put under the context of like tough love, right? About how to see the best in them, but also help them get there, right? In terms of governance, in terms of leading around, in terms of having conversations. It was also interesting to hear about how you're improving your craft, right? About having those conversations in terms of listening more, being authentic, using that conversation as a data point as well about how you're working and evaluating the founder. And also, I think the goal for high quality interactions so that people feel like you just had a conversation recently. So, really interesting set of reflections and learnings there. Lastly, I actually really enjoyed, I think, a very sense of identity, right? I thought the Murakami reference in terms of why he appeals to you, but also the fact that both of you also do long distance running. Obviously, I think it was nice to hear about how you took those, I think, lessons and integrated them into how you approach investing, right? Which is that, I think, long sense of mastery, that long sense of time, that long sense of work. And I thought it was very thoughtful and measured and considerate. And I think it was very nice of you to also share about some of the trade-offs and shadows of that approach as well. On that note, regardless of how you think about it, I still think it's also brave that you have done all the things you have done. So thank you so much
Thank
for
you.
sharing.
Thank you. I could have seen it better. And again, like, thanks so much for having me. It's great dialogue. And if there's an opportunity for me to come back again, happy to. So just let me know.
Thank you for listening to Brave. If you enjoyed this episode, please share the podcast with your friends and colleagues. We would also appreciate you leaving a rating or review. Head over to www.bravesea.com for member content, resources, and community. Stay well and stay brave.